My name is Jay Meisler, creator of The Amazing Trader, and I'd like to introduce you to my partner, Michael Weissman, the architect of The Amazing Trader, built-in risk management and 28 days to trading success program, where he'll show you how, even with a 50-50 win-loss on your trades, you can be a profitable trader and start building equity in your account.
Let's talk about risk management. Hang on a second. Okay, let's talk about risk management. Very, very big misnomer. What's really important here is it's asset management. That is the more appropriate term for what we're doing, not just risk management. Risk management, people think, I put a stop loss on, I'm managing my risk. That's part of the situation, of course, certainly a necessary part of the equation. However, it's not the only part of the equation. Okay, what's really important here is return on investment. That's how you keep score. Okay, and we do that by using percentages. We don't look for pips or points or things like that. We look for return on investment. And our goal, obviously, is, as always, is to maximize our return while managing our risk in a good way. Okay, so hang on a second. Whoa, didn't do that. Hold on. Okay, as I started to say, we're always going to think in terms of percentages. Okay, so when you're talking to somebody and they told you they made 1,200 pips this month, it's so misleading, because what does it really mean? You don't know how much each pip was worth. You don't know how big the trading account was. So you don't really know what the percentage return was. You have no idea what that trader is doing. That pip, those 1,200 pips could have been worth a penny a pip, could have been worth 10 cents, a dollar, could have been worth $10 a pip. You have no idea. And because you have no idea how much risk was taken in order to make those 1,200 pips. You don't know how long people were in trades in order to make those 1,200 pips. So you really have very, very little idea of how this particular trader actually performed. So if you're out there in the marketplace and you see all of these different prognosticators and these FX traders and these gurus, and everybody is talking about how many pips they make, before you spend a nickel anywhere, before you spend 5 minutes of your time following anybody or listening to what they have to say, get an answer to one simple question. And that's very simple, all right? If I follow your system, if I did everything you did, if I was there for every trade you made and make every trade that you made exactly at the prices that you bought and sold, what was my percentage return? And I guarantee you, you won't get an answer. I guarantee it. And when you look at options traders say, I made 210% in 5 days. All right, that's 210% on an option trade. Very possible. But you have no idea of how big that 210% return is relative to their account. You have no idea how much risk they took. So the bottom line is, once again, is what was your return on capital? 210% on a trade. Sure, if you have a $10,000 account and you spend $500 on options and you make $600, you know what? That's a very, very good trade. And if you do that in 5 days, that's a good trade. Okay, but if you're making 100 or 200% on a trade in options, that's 100 or 200% on the trade, on the risk that you took, not on your account. We talk about return on account, on your account balance. That is the most crucial thing that you can remember. We're always talking in terms of percentage return, and you'll see why that continues to be important as I take you through the rest of the presentation. Okay, so this is what we do. I'm going to make it really, really simple for you. It's going to take just a couple of minutes, and you're going to see where we're going. So if you want to be an amazing trader, this is how we do it. This is the formula. All right, you just follow the formula. First of all, we risk 1% of our total account on every trade we do. No more, no less. 1%. If you have a $10,000 account, 1% is $100. Every trade we do, we're risking $100. Now, why do we only risk 1%? Because every trader has losses. I don't care who you are. I don't care what system you're using. The market is too unpredictable. It doesn't end like a book or a movie. Every trader has losses. We want to minimize the losses, of course. Every trader has losing streaks. It just is going to happen. So 1% is a good number, because should you suffer losses or should you suffer a losing streak, you're not doing too much damage to your trading account, and you can always overcome those mistakes. So if you lose 5 trades in a row, you lost 5% of your account, not the end of the world. If you're risking 2, 3, 4% of your account on a trade and you have 5 losses in a row, that could be devastating to your account and very, very difficult to overcome. So you have to protect your account at all times against an unusually big drawdown. So that's why we risk 1%. But 1% is also large enough, as I will show you, that we can make substantial returns as you follow our formula. So that's it, very simple. 1% of your account is what you're going to risk. I don't know what your account size is. That's an individual situation for everybody that's out there. But for your own calculations, figure out what account size you have. You're going to risk 1% on every trade. Okay. All right. Oh, let me go back. Sorry, I missed one. Okay. We're going to look for a 1.25 to 1 risk reward ratio. Once again, percentages, 1.25%. So what does that mean? So if we're going to risk 1% of our account on every trade, we want to make 1.25%. No less, no more. We're not going to play with it. We're going to set it. Why only 1.25 to 1? Well, there's a number of reasons, but I'm going to settle on just a few of the key. We're only looking to put a small edge on our side, okay? 1.25 to 1 risk reward is essentially a coin flip, all right? You can almost throw a dart. You can flip a coin, all right? If you're going to lose 8 points, if you're going to risk 8 points, you make 10 points. If you're going to risk, 20 points, you make 25 points. It's essentially a 50-50 trade, okay? And so what we want to do is we want to give you a system where you can very confidently compete only with a 50-50 won-loss ratio. It's incredible how you see this in action, okay? You don't need to be a super trader. You don't need to be right 85% of the time. You don't need to be a master of financial acumen on managing your account and managing your money. We have a very, very set formula. You're going to risk 1%. We're going to try and make 1.25%. Very, very simple. Because of that, you're going to find many more trade opportunities during the day. So you have to think about it, okay? If you're going to, want to make, if you're going to risk 20 points, you want to make 25 points, okay? Well, that's great, How many 25-point moves do you think occur during the course of a day? Okay, maybe 1 or 2, okay? But if you risk 6 to make 7, if you risk 10 to make 12, if you miss 4 to make 5, okay? We have trades like that all day long in every trading pair that's out there. And we're going out to go after those types of trades. We are relatively short-term traders. I don't want to mislead you. The formula that we use, the Amazing Trader algorithm, as well as the risk management, will work on every time frame, but it's all going to depend on how much time you personally can spend in front of a chart. And we're going to go through that in a second. But just suffice it to say that we're looking for shorter term trade opportunities, and there's a reason for that. Okay, just take a look at something. Okay, now once again, go back and think of what I said before. I want you to go, anybody else who's asking you to spend a nickel for their product or 5 minutes in their training room, all right, your question is going to be, how can I grow my account? I'm going to show you right now how you're going to take an account and take it from $10,000 to $25,000 in 1 year. That's 150% return. If you can get 150% return every year, you will be a hero, a hero. But this is only where we're going to start. and I'm going to show you how easy this is to do. Okay, $10,000 starting balance. I use that number just for it's easy to use, round number. Everybody can relate. If you have a $2,000 account, a $20,000 account, a $100,000 account, we're working off of $10,000. We're going to risk 1% per trade, $100. We're looking for a take profit of $125 per trade, and all we want is a 50-50 won-loss ratio. That's it. Okay, you don't have to win 80 or 90% of the time, although I will tell you, and we'll get to that, if you use the Amazing Trader, you will have better than a 50-50 won-loss ratio. But I just want to show you how easy this is and how little the expectations are about what you may have to do to get this accomplished. So how does that play out? All right, well, you have a starting balance of $10,000. My suggestion, this is what an Amazing Trader does. This is how he spends his day, he or she, how they spend their day. We're looking to do at least 5 trades per day. Another reason why we're using the shorter time frames. And we'll get into that again. But look at these numbers. Starting balance of $10,000. So we're looking to do 5 trades a day. We're looking to do 100 trades a month. If you're able to do exactly what I laid out here for you, and all you're able to accomplish is a 50-50 won-loss ratio. You have 50 losses at $100, you lose $5,000. You have 50 wins at $125. You have a profit of $6,250. That's a net of $1,250 a month. That's 12.5% times 12 months is 150% return on your account, or $15,000. Okay, and that's your ending balance. Now that, by the way, is income. That's assuming now that you start with 10,000, you make your money every month, and you take out your profits, and then each month you start with the same $10,000. Well, that's not really what's going to happen here. What's going to happen here, by using our software, remember, we're risking 1% of your account. As your account grows, you're going to be risking more money. So this is going to compound these returns. Now, I can't tell you exactly how far they're going to compound it, okay? But you can reasonably expect 50-50 won-loss ratio to make over a 50% return in your first year of trading with us after you pass the basics. Now, you think that's cool? How about when we improve your won-loss ratio to 60%, which will happen, can happen, not for everybody, but certainly can happen. Once again, depending on how hard you work, how much time you put into this. How about looking at some really silly numbers? Start with $10,000. Now, all we got to do is increase our winning percentage from 50-50 to 60-40. Now, as you can see, now on a $10,000 account, you have a $3,500 a month profit, or 35%. Times 12 months, 420%. Ending balance, $52,000. Now, once again, that's not including compounding. So look at the amount of money that you can make very, very simply if you just follow the formula. What's the formula? Once again, sorry to repeat it, very simple formula. We risk 1% of our account. We want to make 1.25%, and we want to be right at least 50% of the time. Sounds kind of easy, does it? Make sense? So what's the catch, right? Well, you can't argue with the math, all right? You can take this equation to anybody, you can lay out this formula, and nobody can argue with it. One of the few things in trading that is not subjective. You can't argue with math, all right? So that's the formula. But the catch is, how do you find a system where you confidently can find at least 5 trade setups a day where you can use this formula? That's the catch. The formula you can't argue with. The catch is, can you find a system where you can apply these metrics to? And that's where we got to go. Well, so there you go. Where do you find that kind of a system? It's the Amazing Trader algorithm, what Jay just showed you. Now, that's why we call this the Amazing Trader. Okay, now, let me see how I do this. Because what I'm going to do is I'm going to give you, excuse me, let's give you a demo. Hang on a second. Go this way. Oops. There we go. Okay, so hopefully you guys all see my charts. All right, let me just move something out of the way here. Okay. Now, hopefully you guys, sorry the different colors, but hopefully you can see my charts. All right. What am I looking at here? I'm looking at gold right now, which is not having a very, very good day. All right, as you can see. Now, I'm looking at the 1 hour chart, but first I want to review very, very quickly something that Jay just showed you. Okay. And let's just start. I come into the marketplace. I want to see what's going on. I'm logging in. I sit down. I like to trade gold. Let's get a look at what's happening with gold. All right. Let me explain it to you very simple. We have all of these red lines advancing. Okay. So what does the daily chart show you? The daily chart shows you very, very, very big push to the upside. Okay. Very strong. You wanted to be bullish, obviously, all the way here. We hit a top up here. And remember, this is a daily, so this is now goes back to last month, okay? And now we're retracing that move down, and we're coming back into a lot of support here, okay? So right now, I'm thinking to myself, the bias is definitely still long, although certainly in the very recent past, in particular, the 2 red candles we're in, where you know there's definitely a down bias right this second. But overall, and I'm keeping that in my mind, doesn't mean anything. I'm not trading here yet, although you could trade if you want to be if you want to trade off of a daily chart, you can still do that. And this is actually, you know, maybe a decent place to go long on a daily chart, okay? But not if I want to be in and out of trades over the next 30 minutes or an hour or so. So I'm going to drill down, take another look, okay? So now you can see on the 4 hour chart, the blue lines were all dominating, and of course, because that shows you what those candles on the red lines, you know. So right now, if you're looking at the 4 hour chart, all right, all of this pressure coming down on the blue, you're looking to be short. So right now, my bias, at least for today, is I'm starting to think short term, short on gold right now. 1 hour chart, man, look what's going on here. Look at all of this move down. Clearly, you don't want to be going long gold. All right, it's very, very simple. Remember what Jay said. First thing we want to do is we want to put you on the right side of the market. So right now you're sitting in front of the market. You're just not even thinking about going long gold. At least not right now. It doesn't mean it can't go up. It just means that as a trader, you cannot possibly think about calling the bottom on this. The strength is all to the downside. So let me see if we could do something with that. All right. Now let's look at the 30-minute chart. Look at all of this blue pounding down, pounding down. No red in sight. You got to be short this pair. But you can't be short right this second. I mean, you can, of course, but you can't just jump on this. Why can't you jump on it? Because if you went short right here, at least according to our amazing trader lines, you would have to put your stop loss right above this line. And that's just way, way, way too far away as far as risk is concerned. So yes, you want to be short. Unfortunately, you missed a lot of this move, and right this second, at this spot, you can't go short yet, or at least not off of the 30-minute chart. But let's see what the 15-minute shows. All right. Also keeps pounding down, pounding down, pounding down. Same thing. I want to be short, but you'd have to put your stop loss above this amazing trader line, too far away. Let's see what the 5 minutes looks like. Also pounding down, pounding down, pounding down. You'd still have to. Now, I'm not going to get into it, but when we see, this is a new pattern for us, okay? There's a possibility of a bottom forming right here. I still want to short, but I would only short if we came back up to this area. But let's see if I can find another pair so I can give you a good trading example. Hang on a sec. Let's see what's going on with the S&P 500. Okay, this is the S&P 500. And let's just take a look, because I think I can show you the risk management pretty quickly here. Look at the red lines pounding up. The S&P 500, you're only going long. There is no way in the world that you want to go short the S&P 500 right now, not with these red lines pounding up like that. Look at the 1 hour. Oh man, you definitely want to be long. Now I'm going to show you something. Let's just even scroll down a little bit. Look at all the red lines powering up, powering up. At least now when I say you can go long, you put a stop loss below an amazing trader line, that's a good indication that you will hold. Not a guarantee. They break. Like everything else, they break. But it's still a very good indication. You see, as you see, we had a blue line. That blue line is broken and it's trying to form now another one. You want to be long. You want to be long with a stop loss under here. Well, let me see if I could get, oops, me see if I can get something better. That's a 15. Here's the 5. Well, let's use the 5 minute. Now I'm going to show you how the risk management works. Okay. Well, hopefully we're building. I don't know if you caught that. Do you see how this red line, dotted line just started? That was very important. That's the starting of a potential solid line. This is a temporary line. It has to get confirmed solid. It will get confirmed in the next candle, assuming this low doesn't get broken. But I like the fact, because we have a big up move, and now we're forming even another higher red line. So I'm saying to myself, all right, I can get long. Now watch this, right? We want to use our formula. Now I'm gonna, because this line, excuse me. All right, this is not the trade I would make because this line is not solid yet, but I want to show you something really cool on risk management. Let's just say I'm gonna call this line, I believe, based on my experience, that this line will ultimately confirm and turn solid. So I want to kind of get a head start on it. I want to go long. I click the B button. I take my stop loss, which is this yellow button right here. Oops. Double click. I bring it down to below where that line is. Okay. So I brought my stop loss down below the next amazing trader line that I want. Oh, excuse me. Sorry. I have a very sensitive mouse here, so excuse me. Again, I want to put the stop loss right over there. Okay. Now what happens? My risk management program figured out exactly by placing my stop over here, and if I were to trade right here, okay, these are my settings. I would be buying 17 lots. My total risk is $1,000, 1%. Remember, my account size, if you look down here, is $100,000. You know, just give or take. I'm rounding it off. Okay. My take profit would be about 1.3. It's really kind of, 1.2 to 1.3. It's really 1.25. Okay. But now, as you see, okay, the numbers are changing because the price is moving. So what's happening is we're always risking the 1%, but where our stop loss is going to depend. So now our position size is going to go down a little bit. So, all right, I want to make this trade. Now I just buy. Boom, I'm in. Okay, I'm in. My stop loss is below my amazing trader line. Let me open this up a little bit so I can show you where my take profit is now up here. Okay, but as you can see down here, I got in at 45.9626. My stop loss is in, my take profit is in, the order is set, and all I do is I just sit and wait. Okay, I let it either hit the take profit or I let it hit the stop loss. Don't have to do anything. All you have to do all day long is exactly what I just did. You watch charts, you drill down, you use the amazing trader lines to find an area where you can be on the right side of the market, where you can place a stop loss either above a blue line if you're going short, or below a red line if you're going long. The risk management automatically calculates your position size and your take profit based on how far your entry is from your stop loss. And as you can see, we're moving up here a little bit. This was not the ideal timing on a trade. I'm doing this strictly for demonstration purposes to show you the risk management. Ideally, especially beginners, you want to wait for this line to confirm and turn red. It will, there it goes. Ah, what good timing. See, now that this line, it turned red when this candle closed, okay? So now that's more confirmation, and I'm following this ladder up, if that makes sense, okay? And so here we go. Now, this is the high of the day. We have to take out that high. You know, it could happen, it might not happen, but as you can see, all right, we're continuing now our move up. This is the S&P 500. We have the stop loss in place. We have our take profit up here, and we're going to let this trade hit or not. You have to be right 50% of the time. I can't make it any easier for you. Okay, let's see if we can find something else happening to give you an idea. Hold on, pound. See what oil looks like. Okay. This is oil today. How about you guys like Bitcoin, right? Let's see what Bitcoin looks like. All right, we're on everything. Okay, remember, you can trade cryptos, you can trade FX. I mentioned this. You can trade metals, you can trade indexes, whatever you want. If it's on your MT4 platform, you can trade it. Now, 4-hour chart Bitcoin. Man, Bitcoin is on its way up right now. I can't tell you if that's going to continue forever, but I can certainly tell you, look at all of this strength. You really have to be thinking, if you're a Bitcoin player, I'm looking for a long somewhere, but not right this second. Okay. You can put a stop loss below this line, of course. It's a trade, but it's a 4-hour chart. That means you'll be in that trade a long period of time. Okay. I'm almost done here. Okay. 1-hour chart. I'm kind of, we're in a consolidation here. So I'd want to be long, but, I need something to show me a little bit better. Anything going on here? Consolidation 30. You know what? This looks like it's continuing its move up. We're building some ladders now over here. We tested this blue line up here once or twice. I'm a little concerned. If it gets back down here, I could consider putting on a long position. Let me see what the 5-minute shows. 5-minute shows. Yeah, I could consider putting on a long position. So once again, now I'm not doing this trade yet. It's not perfect timing. Okay, strictly to demonstrate. We have an unconfirmed blue line. So remember, just like before, when this candle closes, as long as that line has not been broken, that will confirm. So let's see. If I wanted to set up a long, click up a buy. I drag my stop loss. Let's just say under that amazing trader line. Okay, just put there. And then I click the buy and boom. Okay, I'm now in the trade again. I'm in there at 9.97 lots. I'm risking $1,004. I'm looking to make $1,252. And I'm just going to let that play until the trade plays out. Okay, guys, that's how the risk management works. I can't make it any easier for you. You don't have to do anything. We preset the levels at a 1% risk, at a 1.25 to 1 risk reward ratio. All you have to do is pick a side of the market that you think you want to be on based on the strength of the amazing trader lines. Drill down until you can get yourself close to a ladder where you can put a stop loss reasonably close to an amazing trader line. Use our risk management, put the trade on, sit back, be right 50% of the time, and you got a great future ahead of you. Okay, so let's go back. Okay, now 8cap, we have a relationship with 8cap, which I'm going to explain in a couple of minutes. And so now this is your opportunity to try our program, okay, with absolutely no risk. And it's a 28-day program, and I'm going to show you exactly how it works and what you got to do to get it. So we call this our 28 Days to Success program. What you do, you'll register for the Amazing Trader, you'll get your download instructions, you'll get the Amazing Trader study guide. It's maybe an hour's worth of a number of short videos. You get the trading guide, you go through it as quickly as you possibly can, and then what will happen is every day for 14 days from the day that you register, you will see one video from us of a key important element of how to use the Amazing Trader. So you'll have it all in the study guide. And if you were wise, you would just get the study guide and dig right into it. It's very, very easy to follow. But every day for 14 days, we're going to send you out one email with a key aspect about the Amazing Trader to help you really get up to speed as quickly as possible. After you spend the 14 days doing that, the rest is up to you. You're now going to spend 14 days of just looking at charts, minimum 2 hours per day. Now, obviously, I'm not standing over your shoulder. How much time you put into this, like anything else, what you put in is what you're going to get out. So the more time you have to look at the charts, the quicker you're going to learn this, the quicker you're going to see how things repeat, the quicker you're going to get confidence in exactly what you're seeing. We think 2 hours a day is a really good amount of time. Now, when you're looking at the charts, you really want to focus on the 5-minute and the 15-minute charts. And the reason for that is because you want to see how the candles react at the end of the candle closing. That's when all the action happens. When a candle closes, that's when a line, if it's going to form, will either start as a temporary line, or it will break, or it will become a fixed line, okay? But that all happens when candles closes. So it's important that you watch 5-minute and 15-minute candles. Every 5 minutes, you want to see how the 5-minute candles close. Every 15, you want to see how the 15-minute candles close. And you should also check the half hour and the hours and see how the candles close. But you're not going to sit there for 2 hours and just watch 1 hour charts. You'll see, one candle close or 2 candles closes. So if you sit there for 2 hours and you watch 5-minute and 15-minute charts, you're going to be seeing candles setting up, closing, lines forming, lines breaking, and you'll really get a feel for exactly how this works, because the things repeat over and over and over again. You're going to open up a demo account. All right. We don't care about you're not worried about your live trading account right now. You're going to open up a demo account. And what I'm telling you, what Jay will tell you, is very, very simple. All right. If you just do this and you sit there and you spend your time trading and you just bang out trades, that we believe anybody on this call after 28 days should be able to average a 50% or better win rate. Okay. And if you can do that, you're on your way to making a lot of money. And we believe that anybody who just spends the time and does exactly what we tell them and follows this plan and puts in the time will be able to accomplish that in literally 28 days.